Imagine a room with 10 people sitting in it. They are all 30 years old. They live in the same neighborhood, work for the same company, and earn exactly the same salary. Let's say $4,000 a month. Now fast forward 5 years. One of them has finished paying off their car loan. Their investment portfolio grows every month, and on their face you see none of that middle-class stress about money. The other 9 still check their bank balance on the 25th of every month with one eye closed, hoping the number hasn't turned red. Same income, same city, same opportunities. So why this massive difference? It's not luck, it's not a rich uncle's inheritance, and it's certainly not some get-rich-quick scheme. The simple truth is that the people who grow wealthy quietly see money through a completely different lens than the rest of the world. They don't flaunt their lifestyle on social media, nor do they get stressed by market ups and downs. Today, let's peel apart the 10 things that this small handful of people understand. Things that the majority ignore their entire lives. I'll warn you up front, some of these points will bruise your ego. They might feel like a gentle slap from a thick finance book. But that's exactly what you need. By the end, you'll either be ready to change your behavior or you'll sink deeper into denial. Let's begin with the most uncomfortable one. First, income and wealth are not the same thing. Most people spend their whole lives trying to turn one faucet harder. That faucet is income. But the wealthy know that how much money flows into your pocket does not determine whether you are rich. Real wealth is what stays with you. Picture your life as a bathtub. Your salary is the faucet pouring water in, and your expenses are the drain holes letting water out. People frantically try to open the faucet wider, forgetting that the drain is completely open. If all the water runs out, the tub stays empty. You become nothing more than a productive beggar. A rat running very fast on an expensive wheel, going nowhere. Quietly, wealthy people have understood that the goal is not a bigger paycheck. The goal is assets, things that make money even when you're not around. Second, making money while you sleep is not a fantasy, it's mathematics. The internet has turned the term passive income into a joke. Most people hear it and think of a 22-year-old standing next to a Lamborghini, but in reality, passive income doesn't mean sitting idle. It means decoupling your effort from your time. Warren Buffett said it plainly. If you don't find a way to make money while you sleep, you will work until you die. That's not poetry. That's simple arithmetic of human lifespan and hourly wages. People who grow rich quietly build systems. They work once or invest once, and then that money keeps multiplying itself. Third, they are not afraid of losing money. They hate it. The first rule of investing is never lose money. The second rule is never forget the first rule. That sounds basic, but most people never follow it. The average person always asks, how much can I gain? The wise person asks, how much can I lose? If they don't have the stomach for the downside, they won't touch the opportunity, no matter how tempting the profit. This is called capital preservation. The wealthy avoid get-rich-quick schemes not because they lack greed, but because they know that if you lose 50% of your money, you need a 100% return just to get back to where you started. They don't gamble. They play the probability game. Fourth, they are stingy on frivolous spending, but kings on value. You may have seen that neighbor who drives a 5-year-old car and brings lunch from home. But when it comes to a mattress or an office chair, they buy the most expensive, highest quality item. The world might call them cheap. But they are geniuses. This is conscious spending. They pour money like water on things that improve their health, productivity, or peace of mind. And they refuse to spend a single dollar on things that are only meant to impress others. A new iPhone won't change your life, but good sleep will boost your working capacity. They cut liabilities so they can feed assets. Fifth, compound interest is not just a theory. It rules. Albert Einstein reportedly called compound interest the 8th wonder of the world. Those who understand it, earn it. Those who don't, pay it. Quietly wealthy people don't see $1 today as just $1. They see it as $50 20 years from now. So when they skip an unnecessary expense, they aren't just saving money. They are compounding their future freedom. A math calculator runs in their mind constantly. Sixth, lifestyle inflation is a silent killer. As soon as salary rises, most people move to a bigger apartment, buy a larger car, start dining at expensive restaurants. That's lifestyle inflation. Your income went up, and you immediately raised your expenses. Net result, you're standing exactly where you were. Wealthy people take their increased income and pour it into investments, not into lifestyle. They don't upgrade their comforts until their assets have grown large enough to automatically cover the extra expenses. Seventh, not all debt is poison. Some is medicine. There are two kinds of debt. One eats you alive, like credit card debt at 24% interest. The other can make you rich, like a low-interest business loan or a loan for a rental property. People who understand money never take debt for consumption. They use debt as a lever to build large assets. They know how to use other people's money to grow their own wealth, not to make the bank rich by paying EMIs. Eighth, decisions made in a hurry are always expensive. The world will try to scare you. Invest today, the offer is ending, crypto is going up. Don't miss the opportunity. Quietly wealthy people mute that noise. They don't suffer from FOMO, fear of missing out. They know that if someone is pushing you to make a quick decision, there's a catch. The road to wealth is boring and slow. There's no emergency exit. Ninth, your salary is not your scoreboard. Your net worth is. Society asks, how much do you earn? But the wise person asks, what is my net worth? Net worth is everything you own. House, cash, stocks, minus everything you owe. Salary is just a cash flow, not a status. A person can earn $10,000 a month and still have zero net worth if their expenses are $11,000. The real meter of wealth is net worth, and quietly wealthy people track it every month. 10th, treat your earning power as an asset. Before they put money into the stock market, they invest in themselves. Improving your skills, knowledge, and network is the biggest investment you can make because the market can crash, but no one can take away your competence. People who grow wealthy quietly never stop learning. They know that if they have become better, their income and assets are guaranteed to grow. This all sounds very simple, doesn't it? But the truth is, the road to wealth is blocked not by a lack of information, but by a lack of behavior change. You might have known these things before. The question is, will you change your ways starting tomorrow? I read these principles myself to stay on track. And if you want to know the specific habits that lock in your wealth as early as your 20s and 30s, the next video will be even deeper. See you there. Like and subscribe. You already know what to do.